Hey everyone, Jay Soloff here at Investors Alley, and this is our options trade of the week. So I'm here at marketchameleon.com and I'm looking at their block screener to see what interesting trades happened. And you can see there's quite a bit of action. If we sort by quantity, there is a ton of very large trades that have happened. So there's so much here that I think it might make sense to sort a little bit more. So let's say we're looking at maybe a covered call trade. So we can go to call. We can go to buy right. So covered call is a type of buy right. All right. Now we're already sorted by quantity, so you can see there's some very large trades here. We have some stuff going on in silver and in volatility, in gold and small cap stocks, tech stocks. So XLF here is financial stocks. It's a popular large financial company ETF. And so there's a lot of action, a couple really big buy right trades. Long term, one out in June of next year, another one all the way out in January of 2021. So let's hone in on XLF and take a look at these covered call trades. So if we go to the options chain, we can then go to this key trades tab and see if this points out the interesting trade. So here are the two buy rights. Let's just look at one of them. Let's look at they were done at the same time. So one's June, one's January of the next year. So let's look at that one. And what we can see here is that 15,000 calls were sold against stock. So that would be 1.5 million shares of stock, which is obviously quite a bit. And the 15,000 was sold, which brought in 1.5 million of premium because the option price was sold for $1. So this is a huge trade done by a fund or a big asset manager. In order to buy that amount of shares and sell that many calls, obviously you have to have a lot of capital behind you. So what's interesting is that these were the 32 calls sold with the stock at $28.59. So the first thing is that the dollar protects down to about $27.59, they're $27.60 or so. That allows that premium to offset a downward move in the stock. So down to $27.59, there is no loss of money on the trade. You can make money all the way up to 32. So that's about $3.50, which is what would that be? Something like 15% higher. So it does give you some upside. Although keep in mind that this is 16 months away. So it's allowing some upside, but not a lot. Likely because this trader is assuming there's a cap probably on financial stocks because of interest rates going down, which tends to compress the profits of these financial companies. So probably this is, I would say, moderately bullish because it allows the stock to go up, and it's definitely a better trade if the stock either sits still or goes up but doesn't go up all that much. So probably assuming that there's a cap, but also assuming that these stocks aren't going to fall off a cliff either. In the meantime, the dollar collected, that's over $28.59. We're talking about 3.5-4% yield. Although that yield is yields over 16 months, so it's not a lot, but it does add some extra yield for holding this financial sector stock, allowing it some upside. So this is a probably pretty safe trade. Moderately bullish on financial stocks, assuming they have a cap, but also not a lot of downside. So not a bad trade, particularly if you have a lot of financial stocks, banks, things like that in your portfolio. Something like this might be a good complement to that, or just on its own if you want to have financial sector representation in your portfolio. Something like this is a relatively safe way to do it and earn a little bit of yield. And that is our trade of the week. If you're interested in learning more about covered calls, other types of strategies, you can click on the link on this page and take a look at my options trading mastery course, where I go over all this stuff. About 6 hours, 11 different videos. So a course that you may want to check out if you're interested in learning more about options.